Hello everyone and welcome back to the channel. As a shareholder of Brookfield for the last 4 years, I have seen a significant shift in analyst sentiment towards Brookfield Corporation stock recently. In the last couple of weeks, many major investment banks and research firms have either upgraded their ratings on Brookfield Corporation or reiterated their buy recommendations, often with increased price targets. For example, in the last 3 months alone, the average Wall Street price targets for Brookfield Corporation stock increased by 13.8%. Even if you look at Google Trends, you can see a significant increase in the search volume for Brookfield Corporation or Brookfield terms recently, particularly around August. The key question is, why are most analysts now so bullish on Brookfield Corporation stock? One reason is that the stock fundamentals is strong. Brookfield has a stellar track record of creating value for shareholders, investing carefully, and returning well above market average to shareholders over time. However, Brookfield was doing this all this time. So what happened recently that changed the sentiment so sharply? If you remember, I talked about Bill Ackman's letter to shareholders almost 6 months ago, in which he mentioned the reasons why Brookfield Corporation was trading at a discount at the time. And one of his main arguments was that Brookfield trades at a significant discount compared to similar US-based asset management businesses like KKR and BlackRock due to weak media presence. And this is exactly his quote. As a Canadian company, Brookfield has been largely ignored by many US institutional investors. We anticipate that improved investor relations and sell-side analyst engagement by Brookfield Corporation should help increase ownership of BN among US institutional investors, which should help close the valuation discount, which the company is taking advantage of through a large share repurchase program. It seems Brookfield really worked on their media presence in the last couple of months. Bruce Flatt and other Brookfield executives participated in a lot of interviews. Their YouTube page is publishing various clips showcasing their investment in alternative assets. They started to publicly discuss their new ventures in AI infrastructure. They are signing new contracts for developing AI data centers left and right with big tech companies like Meta and Google. And a lot of analysts are now covering Brookfield stock and became significantly bullish on the company. This had resulted in closing the valuation gap between Brookfield Corporation and US-based asset managers like KKR. In this video, I'm going to show you a couple of short video clips of various analysts discussing why Brookfield Corporation is a buy and why they are bullish on the stock. Note that these analysts are actually long-term investors in Brookfield Corporation and they had held the stock for at least 1 year now. So they are not newbies with Brookfield, and I think they have nice insights to share with us about the company. The first video is from Christopher Ballard. He's a managing director of Czech Capital Management. When I looked at their top 10 holdings at the moment from their website, they own Berkshire Hathaway as the largest holding with 19.6% weighting. Then they have Brookfield Corporation as the second largest holding with 13.5% weighting. They have Merkle Group, which is another asset manager with 11.6% weighting. And then they have Google with 10.4% weighting. Overall, I think this is a solid portfolio and Brookfield is one of the largest and meaningful holdings in their portfolio. So let's see what Christopher Ballard has to say about Brookfield.
Brookfield really represents as an investment today. How would you characterize it, Christopher?
Yeah, it's definitely a long-term investment with a great global footprint in a lot of different industries, being, renewables, infrastructure, real estate, private equity, asset management. They really have their hands in a lot of different aspects of our lives, whether it's through corporations and institutions or governments. So yeah, if you're thinking about Brookfield Asset Management, it has so many different moving parts and components. You really want to think of it as a long-term play. The small moves that happen, like on a quarter-to-quarter basis that you mentioned, will all look kind of small to us in the fullness of time. So when you're thinking about it, you want to kind of think about something that is in a perfect place to grow over the period of time as the world develops, and it seems to be right on the cutting edge of this AI infrastructure build out. There's really so much to get into when it comes to the business, but I like that you mentioned that you don't really want to think about it on just a quarter to quarter basis. But
Well, I think, some of the things that they've been talking about even this week would speak to the fact that it's very difficult to measure over a couple of months. Christopher will hopefully rejoin us in a little bit, but just as some context for the company right now on that AI part, they are working to assemble 7 major AI computing sites. That would include power and data center shells, which are going to be built out over the next 5 years in the US, the UK, Canada, Europe, and they've talked about the cost associated with that being possibly $200 billion in capital. So, if you think about what big tech giants are spending, I mean, CapEx bills for Amazon, Microsoft, Meta, Alphabet next year are enormous. Part of that is because they have to think about some of their data center needs. And now Brookfield is in the same conversation, a company that has benefited from its real estate footprint and sees these data centers as a part of the big real estate play going forward, is putting that into full gear. And beyond that part of the story, Christopher, of the AI data centers, one of the headlines this week is this goal for the company to focus itself into an investment-led insurer. And that kind of prompted some sort of comparisons to Berkshire Hathaway has a big insurance component as well. As someone who tracks the company, what's been your sense of what the messaging from the leadership there has been on what they would like to do?
So on the insurance side of things, they really have their biggest component is their future growth engine, which is the Wealth Solutions side of the business. So the Wealth Solutions they're making purchases on average of like fixed income annuities, if you will, and taking those assets and redeploying them at much higher rates of return. So last quarter, they had $391 million of distributable earnings coming from that side of the business, which continues to grow at a very rapid clip. And we see as being at a run rate of about $2 billion on an annualized basis for distributable earnings in the very near future. At the current run rate, it's about $1.6 billion. So yeah, when they're getting into all aspects of insurance at this point, right? But right now, it really is this Wealth Solutions aspect of the business that they're focusing on. They're trying to deploy as much capital into, and then as they do so, they're able to get these lower rates of return, and then have this nice size spread as they deploy those assets to Brookfield Asset Management.
Great points from Christopher Ballard in this interview. Let's move on to the second interview of the day. This time we have Tim Regan, Managing Director of KingWest & Company. Their top 10 holdings for the main fund at the moment are TD Bank with 8.9% weighting, followed by Brookfield Corporation with 8.7% weighting. They also have EQ Bank, Royal Bank, Sun Life, and Canadian Pacific in their portfolio, which looks like a nice portfolio. Tim Regan believes that Brookfield is trading at a 40% discount today to its fair value. Let's see what he has to say.
Because you've generally been constructive on the company.
Yeah, we own Brookfield. Yeah. We own it. Our clients own it. Everybody owns it at our firm. Brookfield is a long-term play. And once you look at Brookfield, you talked about AI, the data centers, the infrastructure. But today in the earnings, I would say a couple things came out that were more notes. One was $35 billion of realizations, which means they sold a bunch of stuff. And they said they sold it at carrying value or higher, the vast majority of it, which is good because private equity has been slow to realize. The second thing with Brookfield is, in a little note, they announced that the insurance arm, wealth management, that would be an arm of their business, is now becoming more of a core portion of Brookfield. So you'll see a lot of resource directed there. And we think that business is fantastic for Brookfield, and probably a little undervalued when people look at the Brookfield empire overall.
Richard Fogler, the Chief Investment Officer at the same company, KingWest, also has a short interview with Bloomberg and discussed Brookfield Corporation. Let's look at this one as well.
First pick, we were just talking about before the break, Brookfield Corp. You like this one because it's made up of 5 different parts. I know you just went through it, but maybe for anyone who's just tuning in, let's talk about it again.
Okay, I'll try and do it briefly. Brookfield Corp we like a lot. It's done very well. I said before, we like private equity. That's their prime business. Brookfield Corp, to say something a little bit different than I said a couple of minutes ago, one of the big things in private equity is building data centers for AI. These are hundreds of millions of dollars properties. And Brookfield has expertise in two of the areas that are used in this: real estate and electricity generation through Brookfield Renewables. Mm-hmm. So we think it's extremely well positioned for what is the next, one of the big investment opportunities in for private equity. Having said that, so that puts them in a very good light in the future. As I said, it's trading at 75% of net asset value, which is very cheap. It's got a business that's growing. So a growing business, cheap stock, well managed.
That seems to be a good theme, right? It's a growing business, cheap theme. Stock. It doesn't seem like you actually, maybe I'm wrong, it doesn't seem like you go for any particular sector. It's more so just
good company, cheap stock, good outlook, happy investors.
Finally, let's look at Chris Blumas, who is a portfolio manager at Raymond James Investment Counsel. He actually recommended Brookfield Corporation last year as a stock pick, and it seems this was a great pick by him, as the stock is up over 40% in the last year. I really like his take on Brookfield Corporation valuation in this video, so let's watch it together.
One is Brookfield Core, and this is from August 14th of last year, so almost a full year ago. Recommended at $63.53 up to $90.28, so a 42% upside and a 43% upside for total return. This is essentially an asset management company. What have they been doing right, obviously, with this number of 42% in gains?
I think they've been doing a couple things right. I think one is the underlying business, right? The underlying business on top of their kind of corporate investments is private equity, right? And if you look at allocations towards private equity institutionally, and then even now with potential changes to the 401k plans in the US, there's going to be more demand for private equity. And I think so the very large players, the Brookfields, the Blackstones, the KKRs, are very, very well positioned from a product, from a geographical perspective. So I think one is the underlying business has some really strong tailwinds. And I think, if you kind of look kind of a year ago, just valuation was very inexpensive. So what you've had here is some really strong earnings growth and some multiple expansion for creating that bigger return.
So obviously you'd hang on to this.
Absolutely. This is a core name in client portfolios. I tend to focus on compounders. This is one of the best compounders there is out there. It's not one that I would buy. It's a little bit above my buy price right now. So, which you're probably going to hear a lot today is just, wait for a little bit of volatility. We're in an environment now where there could be lots of headline volatility. And if you know what you want to get, there will be some opportunities to get things at lower prices.
I think I tend to agree with Chris Blumas on this. Brookfield Corporation is a strong hold for me at the moment for multiple years ahead, as I believe the stock can still compound very well over the market average for foreseeable future. As we saw in these videos, it seems analysts see Brookfield Corporation as a well-managed, diversified, and growing company that offers investors exposure to high-quality, inflation-protected real assets and AI infrastructure as a leading alternative asset management business. They have this exciting new AI infrastructure and data center development projects, and it is still trading at an attractive valuation. What are your thoughts on Brookfield Corporation? Are you bullish, bearish, or somewhere in between? Let me know in the comment section below. If you found the video helpful, please give it a thumbs up, subscribe to the channel for more investment insights, and hit the notification bell so you don't miss the next video. Thank you for watching, and I see you guys in the next video. Farewell.